Maverick Traders, welcome out to your currency midweek for February 22nd. Corey here with you. So let's jump into a couple of things here in terms of review of where the market's been and maybe where we're going. Still in a bear market in terms of stocks. We've seen the 5-wave down, the ABC corrections, but the markets, interestingly enough, are hitting a bullish Bollinger Band pattern. So if you follow my theory, my strategy that I developed years ago with Bollinger Bands, well, we've got a buy point in equities. The US dollar, I mentioned this a few weeks. I really turned bullish on the dollar a couple of weeks ago and stated, well, they should start to rebound. We're starting to do that, recovering back up towards some key levels and even through some key levels in terms of US dollar pairs. The rest of the currency markets may be a bit choppy, but we're going to look at quite a few charts here and kind of dissect maybe how the markets trade in the very short term and intermediate term at least. CPI in Canada came in at 0.5, which is lower than the zero point 0.7 expected. Kind of a good thing. I mean, if you think about month-over-month numbers right now, the markets are worried about, and global central banks are worried about inflation and fighting inflation. Now, we've seen inflation top over and pull back. The question ultimately is, well, where does it go from here? Does it stay sticky up in the 4 to 5% range, or do we get it all the way back towards the Fed's target at 2? We'll see. I think it's going to stay a little bit higher, a little bit sticky, and the Fed's probably going to stay a little bit higher on interest rates for a while. Markets were pricing in some Fed rate cuts later this year. I tend to think that's not going to happen, but we shall see. The RBNZ raised rates by 50 basis points, went up to 4.75% at this point. And let's go look at some charts. So I'm going to jump over. We'll come back to this in a minute, but I want to pull up a couple of different charts here. One of those that I think is something that we always watch is the US dollar index, right? The Dixie. And so if we pull this up, remember how important 104 has been. For years and years and years, and almost any time we're around this level, we really highlight this 104 zone. So if we come in, here's 104, and maybe I'll change that color. I don't know, that yellow doesn't show up very well. Here is that 104 mark. It was the peak in 2017, the peak at COVID in 2020, as is usually the case. When all hell breaks loose, people rush to US dollars. It is a safe haven. It's go to cash and go to the most stable, kind of the world's reserve currency, right? And so we saw that in COVID where it spiked all the way up there and then obviously kind of collapsed back from there. If you look at this huge range that we had been in, we have really, for years, we had traded between 104 and kind of 88 or so on the index. Then we broke out last year. And what was last year? Well, we had a bear market in stocks. And usually when stocks are like this, it's a fairly decent bet that the US dollar is defensive and can be going higher, right? We saw that through most of last year. It ended up falling back, and about the time where it kind of intensified was about December. And December is about the time where equity started running up and the US dollar was really kind of falling back. So there's that inverse correlation, if you will. Well, stocks, let's zoom into this chart now that you kind of see the short term. If we just go to the past 4 months, stocks have been essentially in rally mode from about December, and this is where US dollar broke 104 and traded lower. And then a couple of weeks ago, stocks topped out and have turned down, and the US dollar's gone opposite. That's pretty much as we've talked about, that's really what we expected, right? So now the question is, well, do we break through 104 and take off to the upside? I think a lot of ways we can kind of look at the S&P to give us some sense of what's likely to occur. So here's the S&P chart, and here's that Bollinger Band set up. And these don't have to move. And by the way, they don't move perfectly inverse. It's not like S&P's up and the dollar's down. Every single day it's invert. It doesn't work that way, but it's more about the bigger moves, right? This is a bigger downturn in equities, and this has been the time when the US dollar's been in that rally. Not perfectly inversely correlated day after day after day, but the overall move was somewhat inverse correlated. I think equities bounce, and I was a buyer of things this morning, in fact, playing for a bounce to the upside. How far might we bounce? Ultimately, that's kind of the debate. At minimum, I'd expect to go up towards the 20 period. So even if the market just does not have it, it should work up to the 20. That's kind of bare minimum target. If it's really strong, it can get all the way back up here to the prior highs and that upper Bollinger Band. And then obviously, if it's a real bull market, it'll go up even beyond that and take off. And then you can get really pretty aggressive with your targets and say, well, we can measure the size of this and flip it up in the air and have a target all the way up here. This is really my target. This is more of what I'd expect out of the markets, is that we're in bounce mode for the next week or so, that we should trade back up there to just under 4,100. You know, it's not insignificant. 2-3% move higher in the S&P, at least, kind of bare minimum. On the flip side of that, I do expect the dollar to kind of struggle with that 104 level initially. And so it's almost, again, not perfectly inversely correlated, but I'd say, okay, I'd sort of expect the opposite. Here's 104-ish. I'd anticipate that the dollar back and fill for a week or so, establish a higher swing low, and then trade to the upside thereafter. Equity markets, a little bit of a bounce, and then probably going to trade down. And I guess I should have drawn it over here so they're more inversely correlated, right? Down, and then ultimately a break higher in USD. If this were the chart of equities, they've pulled back the past few weeks. I'd expect basically a bounce during this phase. So dollar down, equities up, and then somewhat of the inverse correlation this way, where US dollar returns to the upside, returns to a bull market, and equities back down. That's the picture that makes sense to me, that I'm kind of painting. And so in the very near term, I think, I don't want to really buy the US dollar. My strategy is not to buy breakouts in things that have a lot of overhead resistance anyway. So I'm not really buying the dollar on strength anyway. I'm looking to buy the dips. It's worked really well. If you've been along for the ride and kind of playing the USD to go up more than down the past couple of weeks, I didn't do last week's midweek. Ankit did, but I was with you 2 weeks ago kind of talking about this dollar rally and in anticipation for an upside push. So I think, again, on this dip for a week or so, you'd probably want to be a buyer. That's my take. That's how I see it playing out. We'll see. Again, markets always are ultimately the judge and jury, right? They will show whether this worked or not. But if it's like planned, you want to be playing the dollar a little bit lower in the near term, and then ultimately in the coming months, it should have another big spike to the upside. Let's go back here and let's take a look at a few more items as far as the markets are concerned. So, how is the week shaping up thus far? Well, pretty lousy to this point. S&P down just shy of 2%, but today's the day it hit the Bollinger Band buy setup, right? So it's not where it's been, it's where it's going next that matters. Well, it's come down 2%. We'll probably head right back up a couple of percent here. Crypto markets down, gold and oil down, everything in the negative. Not so great in terms of weekly performance thus far. If we look at a long-term chart of the S&P, you can see this is kind of what I'm showing here, is just wanted to show the big picture, that we've fully played out this entire pattern that we spotted months ago, and we're able to play this full ABC style correction back up here. When it was certainly not obvious, we were calling for a break above the downtrend line and such, a surge to the upside, and that's fully played out. So if you want the big picture outlook for me, is that we're still in a bear market, that we go lower. In the short term, we should bounce, and it's not going to be a huge bounce. I'm talking about a week, a week's worth of bounce or something. The next few days, the equity market should bounce, is how I see it. If we look at currencies so far this week, we've got outperformance in British pound. We've got underperformance in Australian dollar. We certainly got second best performer, US dollar, on the upside. A lot of flat price action, but a couple of things that are moving a little bit better that way. If we look at crypto, Bitcoin Cash is up. It's the outlier. Everything else down on the week, down in the neighborhood of 3-ish% across the entire crypto space. So let's come over and let's take a few minutes here to look at some charts. So we just looked at the dollar index. Let's come over and look at the actual USD currency basket. So I don't want the weekly, I want the daily. And as we kind of map out how far this pullback might go, I think what could be in play here is this type of pattern. And what is this type of pattern? Well, it's a head and shoulders bottom, they call it, right? It's basically a bottoming out process. If we do pull back for a few days, this creates a higher low, but essentially a shoulder, just as this was a shoulder. And it's a bottoming out process. You basically were in the process of making lower highs and lower lows and lower highs and lower lows. And now this would be that process where we'd establish a higher low and then go up to higher highs. And it's a bearish to bullish reversal. Do I anticipate that as the market corrects back in USD, that we would establish a higher low and work our way off of that? That's exactly what I would personally anticipate, is that we're, again, in that I think that the dollar's bottomed, just as I think that equities have topped. Big picture, in the coming months, I think we have more turmoil in equities, and that should be a bright spot for US dollar pairs. People tend to go more defensive in currency land. When you think about cash and currency and transactional and so forth, it is historically a more defensive spot. So there's always potential wrinkles where maybe the US finds itself in a bad spot by itself, and the euro doesn't have the same risks or something. That's possible, but I don't see it as likely. Japanese yen hasn't really traded well recently. Maybe, frankly, coming back into kind of, I would draw these lines a little differently here. I would just draw it out maybe a little bit more like this in terms of this other line, but where it's sort of on the prior breakout zone. You can see the peak in here, the peak in here. And remember, I look at support and resistance. It's not like it's some hard area. Oftentimes you kind of squish into. So I think we're kind of squishing into this support level. Again, Japanese yen, I've been optimistic that it would be a pretty good year for the yen in 2023, but the yen has so many different things. It's been driven almost entirely by the news, by the latest news that hits. And so there were some things that really caused big spikes last year, and now it's kind of falling back into its normal lower grind, especially lately as equities and things have bounced, which makes sense. You know, it's defensive, so while markets are rallying, it should be declining to a certain extent. I think with equities having a rough patch in the coming months, that should be where the yen will have some more of these spikes. But it's going to be hard to trade. It's just going to be hard to trade all year long, I would imagine. And then, of course, the Swiss franc is historically a little more defensive, and it still is just pushing against that upper level. You can buy out of all currencies, this is one that you can really buy on a breakout. It doesn't have overhead resistance and supply. If it clears this, it should go on a run. It should have momentum. It should be running a million miles per hour to the upside because that's clear skies ahead. So Swiss franc looks like really one of the stronger currencies out there just on a trading basis. Let's go back to a few of these others. The euro still hanging in there, similar to the Swiss franc. I wouldn't give it quite the same amount of benefit of the doubt, but definitely has been strong up in a high base. And again, it's high basing after working its way higher. So give the euro credit where credit is due. The euro was plummeting here as Euro USD went sub $1. It went below parity for a while. Now it has recovered pretty steeply. British pound, best performer so far this week. Personally, not going to buy this type of breakout. Why? You just have too much overhead resistance and such. But, if you want to buy the dips or whatnot, that could be a possibility. Canadian dollar, choppily working its way mildly higher. Australian dollar, rough couple of weeks. And New Zealand dollar, rough couple of weeks. And that really fits with my overall opinion that, again, we're kind of moving into a little bit more of a risk-off environment, big picture. So in the short term, if these move inverse to equities, these should bounce in the short term, which would ultimately, I think, be another selling opportunity. Let's look at a couple of Bitcoin charts or so. So here's Bitcoin on the daily chart. Falling back the last couple of days, this was, a big reversal out of what was the kind of exhaustion bottom. You think about news, the worst. Remember, news is just news, right? But the market freaked out and said, all this bad news, this is fraud, this is all these sorts of things with Sam Bankman-Fried and so on. And it happened to be kind of that final flush out, as is often the case. It's bad news that sets bottoms. Why does bad news create bottoms? Well, because that's the final people that are willing to sell were pushed over the edge and said, I can't take it anymore, no mas, too much pain, that sort of thing. And they threw in the towel. And from there, we've moved higher. We've moved higher to a certain extent from a lack of selling pressure as much as anything else, right? The sellers threw in the towel here, and now there's just been less selling, more buying, but still makes it a more difficult road going forward, I think, for crypto in general. But we'll see how that kind of plays out. Let's go to a couple of currency pairs directly. So we had a request for euro pound. And let's pull this up. And we're going to look at it across a couple of different time frames. So euro pound on the potential short side. Sort of the opposite of what we just talked about with the other, where this is maybe already playing out as a little mini head and shoulder top, right? It went from a process of higher highs, higher lows to this break, this lower high, and lower low. And so I would tend to agree that the chart setup in the short term is a little more bearish. I think you want to see just a little bounce underneath this trend line, a little bounce for a day or two to get short for the next push lower. A lot of times these pullbacks are not huge pullbacks. I mean, I'm talking a 1 to 2 day bounce. Kind of draw your trend line and look for a retest underneath. So I'd basically grab a trend line, draw it out here, something like this, and then say, okay, we bounce up into that trend line from underneath, and that's where I'm looking to get short. If it takes 2 days, to get up to it or whatever, look to short under that trend line. That'll present a great risk to reward. Tight stop above, target at least a move back to the lows, and probably take profits on a piercing of that low. So if you're looking at euro, pound on the short side, no problem there. If we turn to a 12-hour chart, if we turn to a 4-hour chart, you're going to see the same dynamic. That's the nice thing about, something that's been breaking down for a few days. You get those shorter term trends really kind of working in your favor as well. So I think that would be my instinct. Again, I'm not really looking to trade it on a momentum basis. And what's worked for me has been much more trading pullbacks than trading breakouts. Breakouts are just susceptible to not having that strong momentum. If you had happened to trade the break on the trend line, great, you could have made a quick profit. But even then, there's some chop that happens thereafter. So I think we're in short the rally mode in Euro Pound, and hope that's helpful. Let's go to Euro USD, where we had a request. So again, we could work our way kind of forward. In the short term, I'm expecting a bounce, right? I expect US dollar to go a bit lower very near term. So Euro USD, I don't know if there's a setup to buy it. I'd probably buy something else, maybe pound, which has been a stronger currency. You could buy this dip. I think I would go there, and I would be leaning more towards, I like US dollar to go down, so I like buying this pair. This would be a good example. I think you're in a bit of a channel type of pattern. We should push back up there. We're able to buy the dip on the prior breakout zone. We can have a tight stop in here and so forth. So something like pound USD, trade it gets you short the dollar for a day or so, or a few hours or whatever. That makes sense to me. It gets you long pound, which has been a stronger currency recently, and it gets you playing more of an opportunity to not chase momentum, which I haven't found as being super successful in the FX market. So I kind of like it from that those reasons, that standpoint. Hope that is helpful as well. So I know that takes you away from Euro USD, but I like the Pound USD potential buy setup better. Pound Aussie, we also had a request for, so let's take a look, clear the annotations. Again, we can just kind of work our way forward. So daily chart, trying to break higher, but a lot of overhead resistance. So we know we're kind of running into some areas of problem, running into some areas of issue. So for me, I mean, just looking at every one of those charts, I think this is one where I'd say buy the dip. Maybe you get a deeper pullback here that you could buy. Maybe there's an opportunity to play it on the next pullback that kind of gives some ground. Maybe you even base here. Maybe we create a high base pattern for a while or something like that. But I'd kind of prefer trading it in buy the dip mode. I'll stick with that. So I mean, you're hunting in the right spot, certainly has upside momentum. What you've seen, though, is that a lot of these times where you feel like it's finally gaining some momentum, look at what happens. Look at it just doesn't have it, right? It runs into some overhead resistance from the path and then just falls apart. And then it starts to look good and falls apart. It starts to try to look good and falls apart. And then, even when it tries to look bad and break this level, it barely pierces down and then it comes right back up. So there's just a lot of chop. If you trade the pullbacks, that can be successful. If we see this break down, we say, well, I'm not going to chase the momentum, but if it gives me a bear rally, then maybe I'll short and play the downside. Or if it gives me a bear rally, maybe I'll short and play some downside. Here it starts to break higher. I think you want to, if it gives me a pullback, maybe I can buy it for the next trade. So I would stick with that. Gold. So GLD. So gold, again, probably out a little bit further in time would be most instructive. Gold really reversed hard right there in early February. This was, for whatever reason, this was a key level for markets, not just equities. It was basically the exhaustion top in equities, but it was the exhaustion top in gold. It was an important top in oil. It was really the spot where a lot of things started to flip. And a lot of the dynamics, it's, that this is where not all things have to move as they, opposites or counterintuitive, counter trend or anything like that. But sometimes it's like the light flip switches, right? And it was on and now it's off. It was risk on and now it's risk off, and it just can change that quickly. Usually you'll see it. There will be signs. Big, huge size candles. Abnormal gaps. See how this gapped? This is just not normal behavior. This is certainly not a normal pullback. The light switch was on and it got flipped to off, right? Now there were other things happening in the markets that helped that to make sense, but the same thing can happen bullishly. I mean, here, the light switch was off, abnormal gaps, abnormally large candles, and look at the run we went on. So in the case of gold, you've got to have something change. There has to be a catalyst that really gets this flipped over. Technically, it's coming into some areas that would have, could have, should have, could start to work, where maybe if you go back here, maybe this was some old support levels and maybe came some resistance, and now it could act as support. Maybe that's the case. But that's more theoretical almost than anything else, in terms of the market has to behave properly at this level. It has to use it as support. It has to. So I'd almost prefer, if you like gold, here's what I would like to see. Something where it flips. And what might happen first is the exhaustion. So if you want to be a buyer of gold, my thought is that something similar to that happens right here. And while the public panics and sells on that weakness, we know that the race began here, and this is more of probably an exhaustion, where anyone that's willing to sell gold gives up, and they've been holding and hoping and praying and doing Hail Marys or whatever, and then they give up hope. Bad news, big flush out, and then what can happen? This is kind of that squish into the mattress, and the next day it confuses and confounds everyone, and now all of a sudden we see it. So I have to trust that I'll know it when I see it, right? A lot of times in trading, it's like, well, I'm not doing anything with gold, and then all of a sudden the light switch flips back on and you go, yep, that's it. There's the support, there's the false break, there's the exhaustion flush out, there's the reversal higher. We're on upside mode, and gold would very likely trade just like that. Maybe it would struggle a little bit at this gap area, but anyway, you get the idea. So I don't know. I don't have a strong opinion right here, but I would paint the picture. what could it look like, what would be some criteria, what should I be watching for, and then as those dominoes start to fall, you know it when you see it, and you take an action and you take a position, and you have a higher probability of success. So the rest of this week, we have a few things on tap. We've got the currency recap as always on Thursday. We've got the currency trading room on, well, the weekend, oftentimes comes out on Friday. You can see, as is usually the case, full slate the following week. We'll have, new classes, new topics coming out. We'll meet back together a week from today for the midweek and such, and just keep plugging along, looking for opportunities, analyzing risk, reward, probability, and working our way forward from there. Thanks again, everyone. Hope you enjoyed it. Have a great rest of your week, and we will see you next time. Goodbye, everyone.